Hi, everyone. So let's be very honest. The industry is facing a lot of challenges, right? One of the first challenges is the regulators bring a lot of pressure on banks and financial institutes to reduce their fees. Also, the profit margin are reducing. Another problem is there is a wave of digital banks entering the market, and the expectation from customers are very high. Hi, everyone. My name is Nour Sabri, and I'm the lead client partner for Banking as a Service at Finastra. And today's topic is around banking as a service, disrupt or be disrupted. Next, please. Oh, next. So the question here is contextual financing, or some may call it embedded financing or banking as a service. Is it a threat or an opportunity? I mean, we see a lot of disruptive technologies coming into play. We see a lot of banking products and services that comes and goes. The question here is banking as a service really or merely hype, or is it a real opportunity that we should consider? I mean, this is the question from today's presentation, and I hope by the end of it, will lead to an answer to this question. What's happening in the industry? You see a lot of partnerships happening between banks, financial services providers, banks offering services to tech companies like Amazon and Apple and Google and the likes. They're offering services as well to consumer brands and the likes. So there's a lot of noise in the market. Looking at this diagram, so let's go back 11 years ago to 2010. Looking at the diagram in the gray area, you see 95% of financial transactions was completed by banks. And only a small 5% was really completed by payment providers or fintechs, the likes of PayPal. Fast forward to today, those fintechs and payment providers have grown to 25% in terms of processing of financial transaction. Now, just imagine what would happen in 2030. My prediction, this will be a 50-50 between banks, fintechs, and payment providers. This is a real threat, and I think we should all focus on this diagram because this is real data. What adds into the problem? A flood of digital banking entering the space. Also, what adds to the problem? The pandemic that made it even slower for growth for the banks. Now, the financial industries is facing with a number of challenges, right? And there's limited support since the previous recession in 2008. One of the issues is regulators putting a lot of pressures on banks to lower their fees. Additionally, the waves of digital banks coming into play. And we keep hearing all about the disruptive fintechs and open banking and all of these concepts that really didn't reach the expectation that we have perceived previously, right? Looking at the ecosystem of financial services, let's look at the first one, which is brands. Brands like telco providers, retailers. Customers are expected integrated services at their fingertip at the customer journey itself. They expecting financial and rewards as part of their loyalties. However, these brands cannot behave like a bank. They do not have the banking infrastructure, the banking license, but there's pressure on them to behave like a bank. Second issue is traditional retail and wholesale FS industry, banks. Now the banks, there's a lot of consolidation in terms of branches as well as call centers, right? And customers are continuously being frustrated by this consolidation. Branches are moving into a digital fashion that customers, they need face-to-face interaction. Also, to add into the problem, in terms of cash deposits and loans are currently being processed by new waves of challengers and newer banks coming into play. Regulators putting pressures on these guys as well to lower their fees as well. Looking at big tech and fintechs, heavily funded organizations, right, coming into play. With that funding, they have accelerated tremendously because they have a lot of capital in their back pocket. However, these guys, they hate regulators, and regulators hate them. And what they're doing, because of the light regulations currently available, what's currently happening with fintechs and big techs, due to the sort of immature compliance and fraud infrastructure, they're building very excessive and strong partnerships and collaborating with others. Finally, have financial services distributors. These organizations, they use banks' products and services and enrich a digital end-to-end journey. All in all, there's a number of challenges that we can highlight here. Now, this diagram is very interesting as well. What it says is banks that decide to open up their APIs and banking services through APIs are experiencing 2 to 3 times more return on assets than the industry average. What it says that banks that decide not to open up their services or to invest in building APIs, they may think that they are protecting their market share, but they're actually shooting themselves in the foot, because sooner or later, their competitors will eat from their market share. So the only solution forward is for banks to really open up their banking services and APIs for others to use. Now, we conducted a survey. This survey was done this year, and it's the Financial Services State of the Nation. And we interviewed around 750 executives from all over the world. And the question and what we have gathered is 94% of the financial institutions agree that open banking is the way forward for growth. 78% have started to open up their APIs. The majority decided to open up their APIs, while 85% believe that BaaS is the way forward for their growth. Hence, most of these executives from all over the world, they believe BaaS is the future for their growth. This is another interesting statistics and prediction for banking as a service. Banking as a service is growing year on year by 26%. This is live data. Now, the prediction is by 2030, the BaaS market will be at $7 trillion. The way it's divided, so you have embedded payments, embedded lending, and embedded insurance, representing $3.6 trillion in 2030. Half of this is really related to payments. So payments really is if you think about BaaS, payment is the main driver for banking as a service. Also, you have wholesale banking as a service. So wholesale banking is one bank offering their banking services to another bank. Like, let's say FAB decides to offer trade finance as a service to other smaller to medium kind of banks, or cash management as a service. This represents $1.4 trillion. And finally, then there's a new market opportunity which is related to contextual or embedded finance. Abu Dhabi, for example, is hosting Formula One next year. Let's assume I'm a customer sitting outside of this region, wanting to fly to Abu Dhabi to attend the Formula One. While I'm in the sort of the website to book my ticket and my Formula One pass, I get offered buy now, pay later. Or I can get offered with like a savings scheme where I can contribute certain payments so I can attend the event next year. Or I can offer it with a personalized, customized insurance for myself and for my trip. This opportunity is worth $2 trillion. Altogether, it's $7 trillion. So who are the key players in banking as a service? So at the top, you see the customers. So these are individuals, communities, companies, small to medium, corporate, accessing financial services from their relative organization or partners. So let's take another example. Let's assume I am Ittisalat. Okay, so I'm Ittisalat, and I have a number of subcontractors, partners, suppliers who need some cash to keep the lights on, to pay some salaries and so forth, or to pay some invoices. These smaller players or smaller businesses, they are not well sort of supported by the banks because they represent a bigger risk. But for Ittisalat, I know my partnership with these guys, and therefore let me give them an SME loan or SMB loan, branded as Ittisalat. However, Ittisalat, they do not have the banking license and the regulations for them to offer loans. And hence, they will be working with a regulated bank that have the infrastructure, have the technology, and have the operation capability and the license to provide these loans to Ittisalat, and Ittisalat can offload it to their customers. This is banking as a service. And where we play in the middle because we want to become a financial services orchestrator, facilitating, allowing Ittisalat to pick and choose different loan providers and enabling the regulated banks to provide services to a number of consumers, players, and customers. The slide is a bit complicated, but it really echoes the previous slide. So over here on the top, you have the bad embedders and consumers, different industries, healthcare, utilities, you name them, they all sit on top. And then you have the partners and distributors and enablers. And these are the tech providers, marketplace players, fintechs, they all enable a certain services. And in the bottom, you have the regulated financial banks, providing infrastructure, technology, operations, license for others to play. And we sit in the middle as Finastra. Now, what's Finastra's value in this is we provide four things. We have a network of 9,500 global customers, meaning when we orchestrate a service, we can take it and introduce it to a different industry, different city, different country, different region altogether. Secondly, we have a suite of solutions that will enable any banks to operate, and our solutions is 95% of banks can operate on our solutions. And therefore, when you orchestrate a service, you may need a specific microservice to enable a financial service, and we provide that. However, we're agnostic with our approach. So you may need this service or you may not need it. And thirdly, we have our platform, our marketplace called fusionfabric.cloud, which we are planning to grow it and to build it so it becomes like the Apple App Store in a way. So far we have 200 APIs, 200 applications, multiple sandboxing environment, 20 data sets, and it's growing. Finally, a number of global marketplaces sits on our platform. Hence, when you publish a service, you can take it and you can publish it for others to use. So I wanted to show you some sample banking as a service use cases. They may be relevant into this region. The first one, imagine Emirates Airline. So Emirates Airline, they are in the transportation industry. They take passengers from point A to point B. Imagine Emirates offering account generation, credit cards, payments, loans to their customers without needing the banking license. So Emirates can work with another bank, and the bank can offer their retail banking as a service to Emirates, branded as Emirates, and the customers thinking that they are banking with Emirates, but they're not banking with Emirates in reality. That's one example. Another example, as SMB lending, the likes of Amar as a construction company. Amar can offer SMB lending to their subcontractors, suppliers, so the loan will be branded as Amar, but really a bank is actually facilitating that loan on Ammar's behalf. Cash management as a service. A very strong bank with cash management capability can offer cash management as a service to other banks, other smaller to medium-sized banks. They can also offer it to entities who are cash intensive, like tax authorities, retirement funds, and the likes. There's trade finance as a service. Again, trade finance's capability is very expensive. From a technology standpoint, also from operation standpoint, is very expensive. And the smaller to medium-sized bank, they may not able to afford building a strong trade finance capability. Hence, they will use the services from a trade finance player who can provide it at much lower cost and much higher quality of service. Of course, FX as a service, there's, this is a typical service that's basically you will be relying on a bigger bank that provide you a much better rate than others, HSBC trying to build it, and many others. And of course, cross-border payments as a service as well. Next, please. So how do we approach going to banking as a service? That's with what we do is we typically work with clients. These are either consumer brands or banks. We identify a list of use cases, BaaS use cases. So for example, the client identifies 6 or 8 use cases. We have a detailed sort of framework by which we will run these use cases, and we will be able to select the top 2 use cases from consumption, from revenue, from profitability, and usage, right? Based on the detailed framework that we run it in. And then we pick 1 or 2 use cases, and we will develop a comprehensive business case. And that's done through a design thinking workshop from 4 to 6 weeks, whereby we identify in the business case financial benefit, non-financial benefit, quantitative, qualitative benefit, issues and risks. We also look at the reference architecture, technical architecture, who are the ecosystems of partners that are going to be involved. We develop the revenue stream to see who's going to be taking what percentage of the revenue. And finally, we will develop a detailed roadmap. So by the end of this 4 to 6 weeks, you have a detailed roadmap of this MVP. After that, we will be developing the MVP, which will take between 3 to 6 months. By the end of it, you have a BaaS use case ready for usage. And you can offer it to the market, you can offer it to your partners to use, and then you do a bit of marketing, and you're hoping that this service becomes consumable, and then we will help you to scale that services to other industries and other regions. Next, please. So back to my original question. Is BaaS a threat or an opportunity? And I think the answer is it's both, right? And the worst thing you do is do nothing and let others take market share from you or steal your market share, or participate in playing in BaaS and become both defending your market share, as well as attacker, taking others' market share. Thank you very much for listening. If you have any questions or clarification, please feel free to reach out. My email is nour.sabri@finastra.com. Thank you.